Hey guys, this is Julie here with JT Wealth. In today's video, we are discussing Playboy's return to the public market via SPAC. And guys, this is not your dad's old Playboy. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are talking about Playboy, who is going public via a reverse merger with SPAC company Mountain Crest Acquisition Corp. So in today's video, we're going to go over the details of that merger, some highlights from their investor presentation, and find out why this is not the Playboy of old. And just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, don't forget to check out some of the links in our description. Right now, Webull is giving away 4 free stocks just for signing up and funding a new investment account, so make sure to check them out. Now, I know when you think of Playboy, you instantly think of Hugh Hefner, his bunnies, and the racy magazine that was filled with great literature and jokes. But the company has made a lot of changes in the recent years and actually doesn't even have a magazine publication anymore. Discussing their legacy, Playboy has said that for more than 6 decades, they've curated sophistication, art, music, and culture. They've entertained, they've advocated for self-expression and personal freedom. They've evolved in real time, responding to and creating culture. They've remained critical thought leaders and platforms for voices, the emerging, the outspoken, and the legendary. For 67 years, they have walked the walk. Now, Playboy was previously a publicly traded company, but was taken private by Hugh Hefner back in 2011. And now Playboy is making its return to the public market via a blank check company, Mountain Crest Acquisition. Now, this merger is expected to close in the first quarter of 2021. Currently trading under the ticker MCAC, once the merger is complete, that ticker will adjust to PLBY. So any current holders of the MCAC stock will see it convert to the Playboy ticker. As you can see, the MCAC stock is currently trading at $10.65. And guys, this merger was announced back at the beginning of October, and we didn't see the normal hype and jump in stock price like we've been seeing with other SPACs. So I think this one is still flying a bit under the radar. Hearing from Dr. Su-Yang Liu, the chairman and chief executive officer of Mountain Crest, he commented that Playboy is a unique and compelling investment opportunity. With one of the world's largest and most recognized brands, its proven consumer affinity and spend, and its enormous future growth potential in its 4 product segments and new and existing geographic regions. I am thrilled to be partnering with Ben and his exceptional team to bring his vision to fruition. What was really interesting in this press release, though, was Ben Cohn pointing out some unique qualities of the Mountain Crest SPAC, saying that Mountain Crest is truly a unique SPAC in that it has no warrants outstanding and only 1/10 of a right per share, which creates a less complicated and less dilutive entity for our shareholders. The SPAC process is an innovative and efficient route to go public that provides us with the growth capital to continue to accelerate our commercial expansion. As part of the transaction, Playboy shareholders will be entitled to receive approximately 23.9 million shares, valued at $10 per share in Mountain Crest, subject to closing adjustments, and Mountain Crest will assume net debt outstanding of approximately $142 million, for a total purchase price of approximately $381 million. In addition, in order to limit dilution, Playboy has agreed to purchase 700,000 Mountain Crest founder shares at $6.35 per share, which will further adjust the shares issuable to Playboy shareholders. Now, as I mentioned, Playboy is no longer a magazine. It's not even an online publication. Instead, current management, led by CEO Ben Cohn, will harness the brand power cultivated over the last 67 years and monetize it through the most attractive channels. As an experienced private equity investor, Mr. Cohn has no attachment to the company's legacy model, but is focused on maximizing cash flow. While there may not be a buck in magazines anymore, there is tremendous scope to grow the brand in everything from apparel to lotion to digital gaming. Now, we all know that Playboy carries some pretty strong brand recognition. As soon as you see that little bunny's head, you know exactly what company you're looking at. And their licensing value is actually still increasing. In 2018, Playboy was ranked 40th on the list of the world's most powerful brands by Licensing Global. In 2020, that has moved up to the 17th place, just behind the NFL. Since stepping away from their printed magazine publication, they have expanded into many different areas. And their pleasure lifestyle platform now includes different items such as sexual wellness with intimacy products and lingerie, style and apparel with fashion and accessories, gaming and lifestyle with their digital gaming, hospitality and spirits, and of course, beauty and grooming with different fragrances, skincare, and cosmetics. Personally, I think that online gaming sector could represent some pretty substantial growth for Playboy. That is a really growing industry, and it was even rumored that Playboy may have some acquisition targets in that industry in mind. And their platform is absolutely massive with $3 billion in global consumer spend. They have a 97% of global unaided brand awareness and 1 million active e-commerce consumers. They saw a 300% North America retail spend growth in 2019 and are actually the leading men's apparel brand in China. Also impressive is management accelerating their top-line revenue and EBITDA growth by executing organic and inorganic strategies. Between 2019 and 2020, we saw them double their adjusted EBITDA, up over 100%. Another big step for the company is that they are transitioning their business model from licensing to owned and operated. This will help them capture a greater share of that $3 billion in global consumer spend against their brand and captures more revenue per unit sold and generates valuable customer data and insights. They'll also be expanding to big stores like Walmart and CVS Pharmacy for distribution of their sexual wellness product offerings. Now, as a whole, Playboy has $400 million of contracted guaranteed cash flows from licensing. So this should give investors some great comfort around overall projections. And that is assuming no renewals, where their historical renewal rate is more than 95%. To summarize Playboy's investment highlights, they have an iconic global consumer platform, a highly profitable business model, a massive growth opportunity with their owned and operated, M&A acceleration opportunity, and a world-class management team. So Playboy's return to the public market really represents a transformed, streamlined, and high-growth business opportunity. Playboy is an iconic and trusted brand, and not just among men. Their ratio between male and female consumers is actually a 60-40 split, so they are addressing a large market. With Playboy having their products at over 10,000 physical points of sales, they already have their foot in the door for further expansion while they grow their different product lines. Full disclosure, I did recently make an investment in the MCAC stock. I think at its current price point, it is still a great deal. And I think this is no longer the Playboy that went private back in 2011. The company has made huge changes, and I think it really paved themselves a path for success. Of course, these videos are never a suggestion to buy and sell any specific stock. This is just made for information and entertainment purposes, and any trade should always be made based on your own research and due diligence. As always, you guys know I love hearing from you, so please let me know your thoughts in the comments down below on this company and upcoming merger. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.